How confident are you that your money is truly safe in your bank account? We live in an age of digital banking, where convenience often takes center stage. But with all the sleek apps, instant transfers, and innovative features, have you ever stopped to consider what truly protects your hard-earned cash? Are you relying on a brand name, or do you understand the robust safeguards put in place to ensure your financial peace of mind? Today, we're diving deep into two crucial pillars of financial security, specifically focusing on a digital banking pioneer, Monzo, and the essential safety net that underpins the UK's financial system, the Financial Services Compensation Scheme, or FSCS. You might be thinking, Monzo? Isn't that just another app on my phone? And yes, it is an app, a very powerful one at that, designed to revolutionize the way we manage our money. But beneath that user-friendly interface lies a fully licensed, regulated bank. This isn't just some tech company dabbling in finance. Monzo holds a full UK banking license, granted by the Prudential Regulation Authority, PRA, and regulated by both the PRA and the Financial Conduct Authority, FCA. This isn't a minor detail, it's the fundamental distinction between a financial technology company and a legitimate bank. This license means Monzo operates under the same stringent rules and regulations as traditional high street banks, ensuring a high level of consumer protection and financial stability. So, what does this banking license actually mean for you, the customer? It means oversight. It means accountability. It means that Monzo isn't just handling your money, it's a custodian, bound by strict rules regarding capital requirements, risk management, and customer treatment. They can't just disappear with your funds. They are subject to continuous scrutiny and audits to ensure they maintain financial health and operate ethically. This regulatory framework is the bedrock of trust in the banking system, and Monzo, by obtaining and maintaining this license, has demonstrated its commitment to operating within these established boundaries. But let's be honest, even with rigorous regulation, no institution is entirely immune to unforeseen circumstances. Economic downturns, operational failures, or even something as simple as a data breach could theoretically impact a bank. This is where the second, equally vital component of our discussion comes into play, the Financial Services Compensation Scheme, or FSCS. The FSCS is an independent body, set up by the government, that protects customers of financial services firms that have failed. Think of it as an insurance policy for your money. It's not something you pay into directly, it's funded by the financial services industry itself, a collective effort to maintain confidence and stability in the financial system. And here's the crucial part, if an authorized financial institution, like Monzo, were to fail, the FSCS would step in to ensure you get your money back, up to a certain limit. Understanding the FSCS limit is absolutely paramount. As of my last update, the FSCS protects up to £85,000 per eligible person, per authorized institution. What does per eligible person, per authorized institution mean in practice? It means that if you have £85,000 in your Monzo account, and Monzo were to fail, the FSCS would guarantee the return of that entire £85,000. If you have, say, £100,000, you would be protected for £85,000, and the remaining £15,000 would be subject to the liquidation process of the failed bank. This highlights the importance of being aware of the limit, especially if you hold significant sums in one institution. Furthermore, the per authorized institution part is crucial for those who diversify their savings. If you have £80,000 with Monzo and another £80,000 with Barclays, and both institutions were to fail, a highly unlikely scenario, but for the sake of illustration, you would be protected for £80,000 from Monzo and £80,000 from Barclays, as they are separate authorized institutions. This is why spreading your money across different banks can be a sensible strategy for those with balances exceeding the FSCS limit. There are also temporary high balance protections under the FSCS. For instance, if you've recently received a large sum from a house sale, an inheritance, or an insurance payout, balances up to £1 million can be protected for a period of 6 months from the date the money was credited to your account. This temporary protection acknowledges that large and frequent transactions can temporarily push balances above the standard £85,000 limit, offering an extended safety net during such periods. It's important to note the conditions for this temporary protection, as not all large sums qualify, and the 6-month window is a strict deadline. Always check the latest FSCS guidelines or contact them directly for clarification on specific scenarios. Now, let's bring this back to Monzo specifically. How does Monzo's structure ensure you benefit from FSCS protection? Because Monzo is a fully licensed UK bank, all eligible deposits held with Monzo are automatically covered by the FSCS. You don't need to do anything to activate this protection. It's inherent in the fact that you're banking with an authorized institution. Whether your money is in your current account, a Monzo savings pot, or even a Monzo joint account, it falls under the FSCS umbrella. It's important to distinguish Monzo from other financial apps or services that might facilitate payments or offer spending insights but aren't themselves licensed banks. Some fintech companies operate using an e-money license, which offers a different, and generally lesser, degree of protection than a full banking license. With an e-money license, your funds are typically safeguarded by being held in separate accounts from the company's operational funds. While this provides some protection, it's not the same as FSCS protection, which offers a direct compensation scheme in the event of institutional failure. Always check the regulatory status of any financial service you use. A quick search on the FCA register can usually provide this information. If a company claims to be a bank, verify they have a full banking license. If they don't, understand the level of protection your funds receive. With that said, thanks for watching, and until next time.